Welcome in. I am the CryptoBullGod, and in today's video, Bitcoin, the king of triangles. If you appreciate the content today, please consider subscribing to the channel, dropping a comment, and leaving a like. It's going to help me out as a content creator. You can find me on Twitter, Tradingview, YouTube, and Instagram at CryptoBullGod. Just a quick disclosure that none of what I'm sharing is financial advice. I'm looking to educate, help, and spread sound technical analysis to the community to help others in making informed decisions. However, the ownership falls on you to make your own personal financial decisions. So before we get into things, we are going to be mainly talking about Bitcoin. I did want to let you know there will be a bonus chart at the end of this video that the Harmonauts and HbarBarians will want to stick around for. So before we get into the analysis on Bitcoin, it's very important for everyone to understand what the difference is between an ascending and a descending triangle. This is an ascending triangle. Essentially, there's a flat ceiling, mind my non-artistic ability. And what's happening is price is coming up and hitting a ceiling, coming down and creating a higher low, hitting the same ceiling, creating another higher low, and hitting the ceiling again, right? So, and generally there's 3 touch points. So anytime, if you've been following this channel for a while, you know when we hit a certain price level several times, it weakens. So because we're hitting ceiling here several times, we're also creating these higher lows. Eventually, the most probabilistic direction for price is up. Okay, very important to keep in mind. So what is a descending triangle? A descending triangle is exactly the opposite. We have descending resistance, a flat floor of support, okay? And what's happening is price is coming down, price comes up, comes down, hits a floor, a lower high, same floor, a lower high. Again, we have 3 or 4 touch points here. And eventually, excuse me, this floor weakens because we've hit it several times. And the most probabilistic direction for the price is moving down. Again, keep in mind, notice, I'm not saying it's a guarantee. However, if you historically look at all sorts of charts that are out there and look at past performance, when these price patterns show up, the most likely direction for price are the ones that I'm indicating. So again, ascending triangle is bullish, price most likely goes up. Descending triangle is bearish, price most likely goes down, okay? So the purpose behind understanding the descending and ascending triangle is because as we examine the historical performance of Bitcoin, what we will see is we will see these price patterns continue to emerge within the price data. And we're also going to examine that when these price patterns emerge, what ends up happening? Is it the most likely direction or the least likely direction that Bitcoin's price has performed? Okay, so let's get into things. This right here, ladies and gentlemen, is an ascending triangle. We have the ceiling, we have higher lows being created here, and eventually we break up. Now, you can't fully appreciate this. This is Bitcoin on a weekly because Tradingview auto scales. So because of all this price data off to the right, this price pattern would look a lot larger if this wasn't here and it didn't go up massively in price. So just keep that in mind as we're moving forward. But this is an ascending triangle. First one we've looked at, price pattern broke up, which is what we would expect more than likely. Let's continue through time. Here we have a descending triangle. You'll also note the descending triangles are in red, they're bearish, and the ascending triangles are drawn in green because they're bullish, okay? So here we have descending resistance and a floor, and eventually we break down. And right away, look what happens. We enter an ascending triangle, okay? We enter an ascending triangle, and we break up, okay? So 3 times this price pattern has shown up. These price patterns have shown up, these triangles, and they've gone in the most likely direction. Here is a massive descending triangle. This is in 2013 going into 2014, okay? As you can see, we broke down. Again, once again, price level broke down. Let's continue through time. So that's the 4th time that we've seen this triangle pattern. This is a large ascending triangle back in 2016. Look at this bad boy. Look at the ceiling here, okay? Low, up here, higher lows, ceiling, eventually break out, okay? That's the 5th time triangle has broken in the most probabilistic direction, okay? Let's fast forward. And as we can see here in 2018, I was here for this, okay? And it's very important to point out, I do state this on my YouTube channel, I state this on Twitter. As much as I love this space and believe in the fundamentals, I remain unbiased in terms of what I see in the chart. I do not interject emotion. It's all about data-driven analysis here, okay? Tom Lee was calling for the 62 to 5,800 floor here to hold as support because the price kept hitting it and stayed above it. I felt otherwise. I had a descending triangle drawn, and look what happened, okay? I was here this whole time, okay? I had just started to invest in the crypto markets in early 2018. I was here for a true crypto winter. Everybody needs to relax, okay? I didn't put that pillow there. That was just by coincidence. That pillow happened to be there and thought I could use it, all right? But everybody needs to chill out and relax. We're not in a crypto winter. I'm going to show you why. It's very important you stick around and see how I'm bringing everything I'm showing you to the present time and what's currently playing out. Again, another triangular formation, descending triangle that played out in the most likely direction. Look what happened here, ascending triangle. Go back to my tweets in 2019. I tweeted about this, and it was much more prominent because Tradingview wasn't auto-scaling this price data here. This is an ascending triangle. Look what happened. We broke out of this $4,000 resistance level and went all the way up to close to $14,000. Again, the triangular formations are going in the most likely direction, okay? They don't have to go in the direction that we know to be most likely, but so far they are. Here's a bearish descending triangle that played out. Look at price data. Lower highs and a floor that eventually breaks and we continue lower, okay? Then we entered an ascending triangle and we broke up. We emerged from that ascending triangle bullishly, but then we had the nice capitulation in the fun times during March of 2020. Once again, go back to my tweets in 2020. You'll see that I had this ascending triangle drawn out, and we ended up breaking out in the most likely direction, which was up, and we went all the way up to around $65,000, okay? So I want to now bring this to current times, because what I am showing, I'm not arguing this, okay? This is a fact based on the data. Right now, you can draw a valid ascending triangle. And if it's helpful, we looked at everything on a weekly view. Let's condense price data and look at it on a 2-week view. You can see here that we have this ceiling and a low and a ceiling and a higher low. Now, I'm not saying price is going to continue out here until 2023. That's not what I'm saying. We could come up, everyone, we could come up here in, May or June and then kind of consolidate here and break up. But what I'm saying is, I'm not giving you my emotional view on this. That's not what this is about. Clearly, if you've been following what I've been saying, I pointed to all these triangles playing in the most likely direction. We are in the midst of an ascending triangle right now. Okay, it doesn't need to break up. It's just most likely that it will. Okay, whether you look at it on a weekly or a 2-week, we have an ascending triangle. Now, the next thing I wanted to show you, and I spoke to this, I believe, 2 videos ago, if you're having a problem visualizing the ascending triangle, we can invert the chart. Very simply, when you invert a chart, what happens is price is now, as you move up the y-axis, price is not going up, it's going down. And as you move down, price is going up. What it also does is you can still draw the same pattern, okay? This is this pattern, but flipped upside down. So a bearish price pattern is now bullish. A bullish price pattern is bearish. See how we have a descending triangle, right? Well, if we break down, if you kept in mind what I said, because the prices are inverted, the chart is inverted. If we break down, we're actually going up in price. Okay, so whether you look at this on an inverted view and you're looking at a descending triangle, or you look at it as a normal view on a chart, it's an ascending triangle, it's all bullish, all right? The next thing I wanted to show you real quick, this will be the last view we look at. If you haven't followed a lot of my videos, make sure you subscribe to the channel. Literally no one is still talking about the historical significance in the 12-hour chart. I don't know why. It has more data points and points to things that are more statistically significant than other views, but no one else is talking about it, but I'm happy to keep tabs on it and keep you updated. Anyway, the thing I wanted to point out on this view is, if we zoom out, we can clearly see we have a low here, a high here, and a higher low here. Those are the basic building blocks of a bullish narrative. So not only do we have a bullish formation, we have higher highs and higher lows. Look at the smaller time frame on a 12-hour. Is this not a low, a high and a higher low. Right now, we are still building momentum on the 12-hour view with higher highs and higher lows, and that bullish momentum will bleed over into the higher time frame so long as that bullish momentum continues. These are concepts that I constantly talk about on this channel. Okay, so hopefully all that helps you feeling a little bit more convicted that right now, as long as the consolidation has been within Bitcoin, there is nothing overly alarming taking place in the price that leaves me feeling like we're going to be entering a massive crypto winter like a lot of people are talking about, and prices are going to be suppressed all year. I don't see anything in the charts telling me that. I don't. There will be another video coming out I keep talking about, and I'm hoping to get it out next week, on the handful of charts and data science models I'm looking at that leave me feeling convicted that we are still awaiting another leg. So wait for that video. I'm hoping to get that one out next week. But the bonus chart that I quick wanted to take a look at for all the HbarBarians and Harmonauts out there. This is the one HBAR chart. I have spoken to this thing relentlessly and tweeted on it. This is why it's important to follow me on Twitter. If you have not, if you appreciate the content, if any of this stuff is helpful, if I'm making any sense whatsoever, hopefully, please subscribe to the channel, drop a like, and leave a comment, because it's going to ensure I continue to create videos. All right. So there's a couple things I wanted to point out here. First off, one of the things I like to see is there's an ascending black line of support here. You can see candle body touches, or wicks, excuse me. The price wicks, but they were candle bodies at one point, right? You see this here, you see this here, and now we're right there. There's also another price point of confluence around the 0.6, which is actually where the ratio is at right now, that it's resting on. So there are several, wow, sorry about that. So there are several points of confluence right in the 0.6 area that we're resting on. In addition to that, the other thing that I wanted to point out to you, okay, none of this is financial advice or a guarantee, but if you can play some of these price relativity charts, you can increase your positions within the projects that you're looking at for these ratios. But it's very important, in my opinion, to use small amounts that you're trading with because these price patterns do not have to play out. But this is one of the more bullish charts that I have that I regularly take a look at. When we ran up here in March of 2021, okay, look what happened. When we wicked out here at around 0.66, okay, we fell 59% down here. From this price level, I'm pointing, I do this all the time. I'm pointing like you can see. When we bottomed here at a 59% correction of what is shown here, we ran from this point all the way up here and did a 6x. Excuse me, a 5x. We did a 5x, okay? We've just corrected, check this out. We have just corrected about 56%. So real close to this 59%. Am I saying we're done correcting? No. Am I saying we're oversold in this chart? We're a little oversold. Am I saying that we're resting on price confluence? Yes, several points of price confluence. So this might be a smart play if you hold both tokens to kind of shift around just a small amount to increase both position sizes is what I'm driving at here. Am I saying we're going to do a 5x from our current levels? No, that's not what I'm saying. I'm just saying price has corrected 56%. And when we got a similar correction before, we consolidated and ran up massively. And this is a very bullish chart. For those that are not following me on Twitter, I do tweet about this regularly. So that is your bonus chart for today. If you appreciate the content, again, please consider subscribing to the channel, drop a like, leave a comment. But as always, let's spread awareness and carry the education forward.